right, all right. Hello, folks. Welcome. Welcome to another live stream. Can you see me or hear me? Let's see. What's up, folks? Hello, welcome back. Giovanni, what's up, buddy? Stephanie. Hello, Saint Felix. Please drop a comment down below and let me know what stocks you want me to go over. Yeah. Are you guys trading Open Door, and what are the other stocks that are going in a vertical line? Open Door, Open Door, Lucid. What else? Let me see. So we have GoPro also going up. Krispy Kreme. How about that, huh? Yeah, we can talk about all of that. Lockheed Martin, Apple, Nvidia, sure. HIMS. Yeah, HIMS is at an interesting level. Over here, it looks like we have lower prices coming up for Nflx, MVP. Yeah, it looks like. Yeah. I have two potential levels to the downside that I can show you guys today. Yeah, I have an anchor VWAP that comes from the April low, and I also have the 100 DMA in the case of Nflx. Yeah. If Nflx happens to go down to the 100-day moving average, that would represent a 20% drop from all-time highs. Yeah. That could be a potential buy the dip opportunity. Yeah, so please drop a comment down below and let me know, yeah, what stocks I am going to be reviewing today. For the members of my Patreon and for the members of my Discord in English, if any of you wants to ask me anything, you can join our voice chat, as you guys can see here. Aisha is over there, Merlat. So if you're not very shy, you can ask me. We can do this stream like, you know, a bit interactive. That would be nice. Yeah, sure. Don't be shy. I hear everyone talking about a September pullback. Yeah, that has to do with the seasonality of the markets. Yeah, it is a potential scenario. Yeah, September is usually a negative month for the markets. Yeah. I mean, taking into account that the markets are trading at all-time highs, that would increase the likelihood for a red September to take place. But you can never assume that any outcome is going to take place with a 100% of certainty, right? So you have to keep in mind. Every single time that I talk about the markets, guys, I do it in probability terms. I never speak in absolute terms. Never. Yeah, that's a lesson that most newies in this business end up learning the hard way. Yeah, I learned it the hard way. I wish you guys don't have to go through what I went through in order to learn that lesson, but it is what it is. It happens. Yeah. This is a business that can humble you more than you think. Yeah, for sure. Hey guys, by the way, and first and foremost, I cannot start this live stream without paying homage to Mr. Ozzy Osbourne. Yeah, an absolute legend who died today at 76. So my condolences to all of the metal fans out there, myself included. We will miss Mr. Osbourne, and I'm sure that we will never forget him. So, Ozzy, rest in peace, brother. Thank you very much for your talent and for your super, super great music. Rest in peace. Sure. That had to be said. Yeah, 100%. Sure. It's a very sad day for for music in general terms. Yeah, a legend, a total legend died today. Okay, guys, so what happened today in the market? So we are at a very tricky spot here. The rally, guys, that started out in early April seems to be exhausted. You can tell that the rally is exhausted. So the bulls are tired. We are waiting for a pullback. And we are getting a pullback sooner rather than later. Or later rather than sooner. Okay? But the situation that we are dealing with as of now is a very tricky one, guys. We are having low volume, narrow ranging trading sessions that are offering little to none trading opportunities. And very low institutional participation. Let me set an example. So Nflx reported last week. The report was great. It was a very good report. And the stock went down, but the day after the report of Nflx came out, analysts were lining up, upgrading the stock. And the average price target, guys, was $1,500. 1 year out, that is. And so far, the dip hasn't been bought up. Why is that happening? That is happening, guys, because we need liquidity in the markets. The markets went up a lot too fast. So we are waiting for a pullback. We are going to get a pullback, but if we take a look at the closing of the indices, take a look at this. Russell 2000 up today 0.79%. Nothing crazy. The Nasdaq had a red day, down 0.39%. S&P 500, take a look at this, guys. The S&P went up today 4 points. 4 points. Up 0.06%, and the Dow Jones went up 0.40%. Take a look. Again, if you take a look at the closing of the indices, it was for the most part a green day, but most stocks didn't do much today. And mind you, most stocks out there, especially higher multiple stocks, are starting to go down. The rally seems to be exhausted. I am talking about the Oakleys of the world. I am talking about the Coinbases of the world. I am talking about the Robinhoods of the world. Why not the Nflx of the world? The rally seems to be exhausted. But what's the issue here, guys? If we pull up a 4-hour chart of the SPY, take a look. How can we short this technical chart? And mind you, guys, I was able to take a day trade today with SPY puts. I will show you the trade. And I called out this trade on both servers, Christian's and mine as well. I told you, if 628 is broken to the downside, that it opens for 626.15, which was our pivot. That trade did work out to the penny. But take a look at this, guys. How can we get puts here on the SPY? Because we are supposedly waiting for a pullback. Take a look. This is a clear uptrend. Above all the moving averages, upward sloping, 5 DMA, 20 DMA, 50 DMA, 200, 100. Take a look. What's not to like in the case of the SPY? So what bearish case can we make here? Zero. Nothing. There's no bearish case to make here. From a technical standpoint, if we are going to talk about the valuation, the general valuation of the SPY, it is trading as of now with a forward P ratio of 22. I mean, yeah, we can make some bearish case here and there. But in general terms, this is a very tricky tape, guys. In a major uptrend, after having gone up, take a look at this, guys. The SPY went up, has gone up since early April, 31%. Unbelievable. Unbelievable. So we're waiting for a pullback. We have a pullback coming, but we cannot time it. We cannot guess stops. I am not in the guessing business, guys. That's not the business I am trading with. I am dealing with. Not at all. I am in the business of trying to understand the language that the technical charts are speaking. And as of now, this is a major uptrend above all the moving averages and above a rising 5-day moving average. So we need to wait until sellers show strength before going, guns blazing, buying puts here. So it is a tough tape. It is a super tough tape. Yeah, no doubt about it. Take a look at what happened today, guys. Speaking of the SPY, so check this out, guys. Let me pull up here Chris Saint's Discord. Oh, by the way, I wanted to say hello to the people that showed up here in Charlotte last Friday. Take a look. We had another in-person meeting, guys, here in Charlotte. So not this Friday, but the Saturday before that, I had an in-person meeting in New York. And that was a big meeting, guys. Like 35 people showed up. That was a super nice meeting that I had. And last Friday, these guys and girls showed up, and we talked for 3 hours or something like that. This was a super nice meeting. By the way, if you live in Boston, who lives in Boston here? Yeah, we're having an in-person meeting in Boston by late August. So get ready. Yeah, I am headed to Boston, and we are going to have an in-person meeting up there. Yeah, get ready. Yeah. Ocean Goose, are you in Boston for real? No, you are in Los Angeles. Yeah, I mean, I gotta go to LA. I know, California. It's on the top of my bucket list. Yeah. So thank you very much for those who came to our meeting on Friday. West Coast, baby. Yeah, sure. I gotta go. Sure. Okay, that being said, take a look at this, guys. So, this is my pro investor channel in Chris Saint's Discord. Take a look at what I told you guys today. Let's go see. Take a look at the time, guys. 8:51 a.m. Look, and I also posted this information in my Discord in English as well. I told you, keep an eye today at 628, 626.15. Take a look at this zone, guys, that I told you guys about pre-market. This call out was spot on. I said, while the bulls can sustain price above that level, they are in total control of the tape and can push the tape higher. Then I told you guys 9:46 a.m. and this is an ability that for the newbies out there you will be developing over time, for sure. This is an ability that takes time in order to be developed, like being able to recognize certain correlations that take place during a trading session. I told you at 9:46 a.m. semiconductor stocks are very weak. Keep an eye on 628. If broken to the downside, the door opens for 626.15. Take a look at the time, guys. 9:46 a.m. And this is a trade that I took myself. And let's reconcile that with a 1-day 1-minute chart of the SPY. So 9:46 a.m. Let's go see a 1-day 1-minute chart of the SPY. Take a look. 9:46 a.m. I told you here, guys. Let me zoom in here. Look here, I told you. The SPY was trading at 628.44. Hold. Someone is calling me. I'm not available right now. Take a look. 628.44. And take a look at the time, guys. 9:46 a.m. Again, this information was posted at 9:46 a.m. So when I told you guys, let me see. When I told you guys that if 628 was were broken to the downside, the door was about to be opened for 626.15. Take a look at what happened, guys. 1 day, 1 minute. See, this red line that you guys are seeing here is 628. It was broken to the downside. And take a look at the massive drop that we saw in the SPY from 628 down to 626.19, guys. The SPY made a low today at 626.19. And take a look at the time, guys. 9:54 a.m. If you kept an eye on the information that I was posting on Discord on both servers, Chris, Saints, and mine as well, you ended up making money with this call out. Take a look at the level that I told you guys. 626.15. So the SPY made a low today at 626.19 at 9:54 a.m. I was telling you guys about 626.15. Take a look. 8 minutes before, the SPY paid a visit down to 626.19, as I just told you. Take a look at what I told the guys on my Discord. Look, let me show you. No, this is not this is the Discord in Spanish. This is the Discord in English. So take a look. So what was 626.15, guys? Look what it was. Look at this. This was our pivot today, guys. Take a look. 8:43 a.m. I told the members of my Discord in English, our pivot today comes in at 626.15. And I also said at 8:43 a.m., 628 is also important. If both levels break, the burst could take full control of the tape. This is exactly what happened, guys. 628 was broken to the downside, and we found support right at 626.15. Exactly. Other than that, guys, the tape was very slow today. The SPY didn't do anything other than this drop. So once we saw this bounce of the SPY and a recapture of the 5-day moving average, the SPY traded within a $1 zone. Nothing to do here, guys, for the most part. So if we pull up here a 4-hour chart, as long as the bulls remain above the 5-day moving average, but more importantly, guys, above this rising 20-day moving average in pink, 621, in my opinion, unless we are talking about a short-term, bearish trade, like the one that I took today. Take a look. Let me show you guys, by the way. This is one of the trades that I took today. There you go. I purchased puts of the SPY, and I ended up making here $132. I closed these puts exactly, or I closed them exactly here, pretty much at 620, when I noticed that the gap to the downside got filled. But other than this drop, nothing happened, guys. Low volatility, another narrow ranging trading session. So be careful, guys, because at some point they will be pulling the rug out. We have a drop coming, but we cannot guess it. We cannot time it. We just need to be patient, and we need to let the technical charts to let us know when the time has come in order to get some puts. Maybe for a swing trade. Maybe to short, I don't know, Nvidia. Or some of the market leaders, such as maybe Microsoft. Or maybe Palantir. Who knows? But, in the meantime, it is what it is. This is a technical chart that is under the total control of buyers. And there's zero reason to guess a top here, guys. Again, I am in the business of letting the technical charts let me know what do I have to do instead of guessing tops. I am not in the guessing business here. By the way, I wanted to show you the performance of the 11 sectors that trade inside the S&P 500. Take a look. 11 sectors. Healthcare, up today 1.88%. Real estate up 1.78%. Materials up 1.40%. This is utilities up 1.24%. Most of the sectors closed in positive territory today, and the only sector that closed in negative territory was technology. So, in my opinion, guys, the leading indicator that we need, if or whenever they pull the rug out, is going to be semiconductor stocks. That's a leading indicator. So, for the most part, the sector that led this super rally that we have seen since early April was on semiconductors. I mean, that's not a sector. That is actually an industry. It is wrong to say that semiconductors are an industry, are a sector, because they are an industry. So the industry that led the rally that started in early April were semiconductors. Yeah. So if the markets are going to start to roll over, I guess I would say, and this is my hunch, I think that we need to see Nvidia and Broadcom and AMD starting to go down. That's negative for the markets in general terms. Semiconductor stocks or semiconductor or the semiconductors as an industry are very important relative to technology. And needless to say, guys, the most important stock in the world is Nvidia in market cap terms. So keep an eye on semiconductors, and if certain levels of support are broken to the downside, then maybe we can go guns blazing buying puts. You guys were asking about seasonality. Yeah, September is usually a bad month for the markets, usually. That doesn't imply that this September is going to be a red month, okay? Also, from a seasonality standpoint, guys, we usually see into late July, the VIX is starting to rise. So the last week of July is usually a good week from a seasonality standpoint for the VIX, the volatility index, the fear index. So that is something to keep an eye on just in case. Yep. Yeah, it was done early. All right. Okay, so what stocks are we going over today, guys? Did you guys want to take a look at Open Door and what is it? What else? So we have Open, GV. Okay, and let's talk Nvidia for a long-term hold entry in the next UC pullback. We can talk about that, yeah. Sure. I heard everyone talking about a September pullback. I already told you guys that. Okay. Netflix. Let's go over Netflix, guys. We're just getting killed as of now. Nflx. Okay, let's go over Netflix. So here's the deal, guys. A very good report, the one that came out last week. They are taking profit. And unless something unexpected happens here, guys, I got to tell you something. Put this down on a sticky note. Unless something unexpected happens here with Netflix. Bad news. I don't know what that could be. I don't know. Maybe they all of a sudden, I don't know. They lower guidance or something like that. I don't know. All of a sudden, a brand new competitor in the streaming business, shows up for Netflix. Unless something super unexpected happens, this dip is very but very likely to end up being bought up. Very but very likely. Why is it? Because this company has turned into a monopoly, guys. There's no competitors. There is no competitors. This company has zero competitors, guys. Unbelievable. I cannot think of any other company, guys, nowadays, maybe Nvidia, we can make a case, right? That has zero competitors. Who is competing against Netflix, guys? Who? Name it. You name it. And you will say, oh, HBO Max and Peacock. Bullshit. This company has no competitors. Go figure, guys. All of the streaming companies out there, all of them, you name it. Prime Video, which belongs to Amazon. That's a whole different story. Peacock, Hulu, I don't know, whatever it is. All of those companies are burning money in this business. The only company that is making a profit out of the streaming business is Netflix. This is absolutely unbelievable. Absolutely unbelievable. So here's the deal, guys. I have a potential level of support. By the way, let's see if the bulls can recapture $1,200. It's a potential level of support. It's a fat number. You guys know that fat numbers are important in this business. And take a look, guys. You know that I use 5 moving averages. I use five moving averages. Daily moving averages, that is. I use the 5 in order to determine who is in control of minor time frames. I use the 20, the 50, the 100, and the 200-day moving average. So take a look at these guys. This green line that I am pointing out with my mouse is none other than the 50-day moving average, 50 DMA. Take a look at how it is coinciding with a downward sloping 5 DMA. Here. Where did Netflix fail? Where did Netflix fail at in yesterday's trading session and today's as well? Look, the buyers couldn't take out the 50-day moving average. And today we had both the 5 and the 50 coinciding at $1,230, $1,230. This is a clear level of resistance, guys. This is why I am using these moving averages. So let's see, first of all, this is something that could be positive in technical terms. Maybe, I don't know, maybe Netflix opens gaps up tomorrow and buyers can sustain price above $1,200. A potential process of consolidation above $1,200 could open the door for another test of $1,230. If that isn't the case, guys, if Netflix opens the trading session tomorrow, or I don't know, maybe Netflix opens tomorrow above $1,200, but that level cannot be sustained as support. $1,200 is a previous level of resistance, by the way. So I wanted to show you this anchor VWAP. Let me see. What is it at? There you go. Here it is. Let me pull up Netflix and Nflx. Let's go see Netflix. Alrighty. So I have a bunch of moving averages here that are not really meaningful. Let me remove them. Okay, this one as well, and this one as well. Okay, so let me display and anchor the volume weighted average price line, guys, that comes from the April low for Netflix. So Netflix went down to $820 in early April. Okay, take a look at this. So I would be curious about Netflix paying a visit down to this anchor VWAP that comes from the April low. So what message is this a VWAP sending us? Well, that the average market participant that started a position on Netflix back in early April at $820, very good job for them, has an average price on those positions of $1,132. So these guys started positions on Netflix at a very low price, and if Netflix keeps dropping, I think that those buyers might be potentially defending price down there, $1,130. On top of that, guys, if we take a look once again at this 4-hour chart of Netflix, take a look at the 100-day moving average. Take a look in blue. This is a major moving average. It is rising. Remember that the slope, or keep always in mind that the slope of a moving average is very important. When a moving average is rising, it is potentially, I should say, pushing price up. $1,106. So I'm thinking that, again, in regular market conditions, if Netflix keeps dropping between $1,130 and this rising 100-day moving average at $1,110, so we have like a $20 potential support zone from which Netflix could be bouncing back up. On top of that, guys, take a look. So from all-time highs at $1,348 down to $1,110, which is the level that coincides with the 100-day moving average and with a previous level of support, by the way, for Netflix back from, I cannot see it here, back from May. This would potentially represent, guys, a 19% drop, pretty much a bear market. So we have the convergence of an important anchor VWAP that comes from the April low with a 100-day moving average and with a potential 20% correction, which would be a very good excuse for most institutions of Wall Street to buy the dip on Netflix, because this company is killing it. This company has turned into a monopoly. No competitors whatsoever. So those are the levels that I would be keeping an eye on Netflix. Let me take a look, by the way, at the market structure of Nflx. Let me see. Let me pull up here the chart. 4:39 p.m. Nflx. Let's go see. And take a look, guys. This market structure chart, and again, guys, what you're seeing here, I always explain this to you when I go live for you. So what you see on top of this chart is the demand of any given stock. Demand means buyers, supply sellers. So the supply is going up, which we can reconcile with the fact that Netflix is showing us, as of now, a downward slope in 5 DMA. So we can clearly state that sellers have shown up in minor timeframes, but the demand is starting to rise. So I wouldn't be surprised, guys, if Netflix recaptures $1,200 and fills a gap up to $1,230-ish soon. Or if Netflix keeps dropping, guys, I would be surprised, and that could be the case because I never speak in absolute terms, if Netflix doesn't at least has a tradable bounce of the zone that I just told you about, $1,130 down to $1,110. Any other question about Netflix? It was a very detailed analysis of Netflix. Sure. Okay, let's go over Meta. Sure, let's go over Meta. Let's go see Meta. Oh, by the way, guys, so we have tomorrow we have 2 very important reports. I mean, actually one very important report, because I mean, for the most part, we already know the Tesla's report, the Tesla's report is gonna be. I mean, unless something unexpected happens, guys, Tesla's report, Tesla's earnings report tomorrow should be ugly. But in the case of Google, Google could be affecting Meta. Why is it? What do you think? That Google's report could be affecting Meta, guys? And excuse me. I've been speaking all day long, guys. You know that I do live stream for the members of my Patreon in Spanish during the whole trading session. So when I go live for you guys, my throat is like dying. And now I am also narrating the trading session for the members of my Discord in English, like on a real-time basis. I'm super busy. So what do you think? Why Google's report could be important for Meta, or could be moving Meta, could be affecting Meta in a positive or a negative way? What do you think that is? Competition. AI guidance. No. That was close, but not. No. How about advertising revenue? Yeah, of course. Sure. So that is going to be, I mean, if Google happens to drop the ball tomorrow, guys, on advertising revenue, or they say that the economy is getting weaker and that, I don't know, that they are seeing that some companies, or that most companies are like, you know, decreasing their investments in regard to advertisement, correct. That could affect negatively Meta. So if I wanted to start a trade on Meta, guys, tomorrow, I wouldn't do it because Meta could be affected by Google's report. I got the same question today on Discord, guys. Someone was asking about Uber. And I think that with Tesla reporting tomorrow, it's not a good moment to start the position on Uber. So if tomorrow after hours, guys, Elon, you know, starts talking about robotaxis all over the world, and they will dominate the world and the business of robotaxis, that could affect Uber in a negative way. So in the case of Meta, I would not be trading this ticker tomorrow ahead of the Google's report. Okay, so Meta went down today 1%, closed the trading session at $704.81. So the short is starting to look weak, guys. So Meta has been trading within a, I would say, $16 range since early July, has gone nowhere. And in my opinion, guys, I wouldn't touch Meta below the 20-day moving average. This pink line that I am pointing out with my mouse. So the 20 DMA is signaling as of now $717. Take a look at how, do you notice something here, guys? And I would say, I mean, I've been using these moving averages for years, 4 years. Take a look at how Meta failed right at the 20-day moving average yesterday and today as well. Very clearly, as of now, this could be positive. The bulls are holding the 5 DMA as support. They did it yesterday and today as well. So take a look, guys. Clear resistance right at the 20 DMA yesterday and today as well. And take a look at how the white line, which happens to be the 5 DMA, has acted as support or did act as support yesterday and today as well. So it's going to be either the bulls finally taking out the 20 DMA and starting to close candles above the level, so above 720 bucks ish. That could be potentially attracting buyers into this technical short of, if Meta starts closing candle below the 5 DMA, $705, we could see a retest of 691, which was last week's low. And if 691 is broken to the downside, I would keep an eye on the 50-day moving average near $685. Keep also in mind that Meta reports next week. So the implied volatility as of now is higher than usual because this stock is reporting next week. So that is also something to keep in mind. So I would be constructive about Meta above the 20 DMA, above $720 ish. And I would feel very negative about this ticker if the 5 DMA is broken to the downside. And keep also in mind that probably Google is going to be affecting one way or the other Meta tomorrow. Let me take a look at the market structure, supply and demand here. What do we see? Let's go see. So take a look. The demand is flat. It isn't rising. It isn't going down, which is good, I guess. The supply is trying to rise. We never want to see the supply rising. So ideally, guys, when it comes to the market structure of any stock, we want to see the demand going up or rising, buyers, and the supply going down. So in this case, I would say that we have a tie. And the fact that the demand is flat could be implying that this 5 DMA that as of now is signaling $705 could keep acting as support. So there could be a trade here from 705 up to the 20 DMA up to 717 bucks. But it's a short, guys, that doesn't tell me anything positive. It's choppy. You cannot tell who is in control of the technical short. Seems to be losing momentum. So I don't know. This would be a ticker that I would be avoiding as of now, guys, until I have a better understanding or a better idea of who is in control of this technical short. Let me see if we can see here any anchor VWAPs that could be worth pointing out. Let me see, Meta. I am curious about an anchor VWAP from all-time highs. Let's go see. Yeah, take a look, guys. So an anchor volume weighted average price line that comes from all-time highs is signaling as of now 716 bucks. So what message is this anchor VWAP sending us? Well, that the average market participant that started positions in Meta from all-time highs has an average price as of now, an average cost or a cost average of 716 bucks. $716 is pretty much coinciding with the 20-day moving average. So wait until buyers, guys, or sellers take Meta out of the current range. Above 700, yes, above 720 bucks, I would be constructive about Meta. Yep. All right, so what other stock? Let me see. Let's go see. Guys, I wanted to talk about the gamma squeezes that we're seeing as of now, because someone is asking about Lucid, right? Keep an eye on the IV rank. Let me show you, and I will go over SoFi. What is it at? I have version here. Here it is. Take a look. So these are the hottest tables in the big casino today. What's the big casino, guys? Do you know that we have in the stock market a big casino? Huge casino, I would say. So what's a big casino? If I tell you that these were the hottest tables in the big casino today, what am I talking about? What am I talking about here? Anyone has an idea? Well, when I say the big casino, I am talking about the options market. No? The options market. Yeah, that's a casino. No? The big casino is the options market. So take a look at these guys. Today, the hottest table in the casino was Nvidia, with 2.4 million contracts traded today. 62% of those contracts were call options. Take a look at the second hottest table in the casino, guys. Open Door Technologies. Unbelievable. This is unbelievable, guys. A penny stock with a greater number of contracts traded relative to Tesla, for instance. That is reporting tomorrow, by the way. This is absolutely unbelievable. Keep an eye on the IV rank. So if you're trying to trade on these kind of stocks, such as Lucid or Open Door, or what other meme stock do I see here? What is it at? I think that I saw Coles. Take a look at Coles. If you happen to see the IV rank reaching 100, that implies that options, both calls and puts, are extremely expensive. This is a key factor for a game squeeze in order to be reversed. In the case of Open Door, take a look at the IV rank. It's at 39%. What does that imply? That options, in general terms, both calls and puts, in the case of Open Door, have been more expensive relative to today. Only 40% of the time. So despite the fact that we have an IV percentile of 95%, that implies that the implied volatility is super high. So despite the fact that the IV percentile is at 95%, so obviously both calls and puts in the case of Open Door are very expensive, the IV rank is at 38%. So options in relative terms, or in general terms I should say, are not really that expensive. So that makes me believe, with the positive flow, with 65% of the contracts that were traded today in the case of Open Door at 65%, that the game squeeze on Open Door might not be over, guys. But you need to reconcile this information with the technical charts. So you need to wait until buyers show up and recapture an important level. In the case of Open Door, it is $3.15 approximately. But take a look at the IV rank of calls precisely. KSS, 100%, guys. I would be amazed if this gamma squeeze of calls keeps going tomorrow, because this implies that both calls and puts, in the case of calls, KSS, have been cheaper relative to today's trading session during the last 12 months. So options are extremely expensive, guys, and that is going to be an issue. That is going to be a problem for out of the money call buyers, call options buyers, in order to keep this gamma squeeze going. Let's see Lucid. Take a look at Lucid, guys. 76%. The IV rank is at 76%. It's very high. So whenever you see a stock going up a lot, guys, or going down a lot, and maybe, I mean, that is not my trading style, but if you want to either catch a bottom or try to catch a bottom, you know, be a hero, or try to guess a top, you have to take a look at the IV rank. It shows you how expensive options are relative to the last 12 months. So I'm still curious about Open Door. If it keeps going down, then so be it. That's fine. We need to always keep in mind or always take a look at the technical charts. We cannot, make trading decisions in isolation, only taking a look at the IV rank or the IV percentile. But I would be curious about Open Door, and let's see if this, gamma squeeze can keep going in the case of calls. I mean, with the IV rank at 100%, let me take a look at the technical chart of calls. Let's see. KSS. Take a look at these guys. Wow. If you're chasing this stock, guys, this stock is, in my opinion, this stock has a very high likelihood of going down. What's a good range for IB rank? So it shows you how expensive both call options or put options are relative to the last 12 months. So the lowest, the better. The lower, the better. Take a look at NVIDIA, guys. IB rank 4.87%. Take a look at the IV percentile. 4%. So both calls and puts in the case of NVIDIA are very cheap as of now. Super cheap. Wouldn't that be a temptation for, so many market participants that, that started positions on NVIDIA in early April to buy puts as protection because the stock has gone up a lot recently? That is something to think about, right? You guys have to get familiar with these concepts, guys. IV rank, IV percentile. And know how to read this information. Again, you cannot make trading decisions based on this information in and of itself or alone in isolation. But this is something that helps. I would be curious. I'm still curious about Opendoor. Yeah. If the stock never recaptured $3, this is it. The gamma squeeze is over. But with the IV rank at 38%, I think that the gamma squeeze could keep going. Who knows? We'll see about that. Yeah. So it's good that you learned something new today, right? Awesome. So SoFi, my BlowFi. SoFi is reporting earnings next week, guys. So let's see if we have some sort of very high implied volatility. Yeah. The implied volatility is going higher, guys. Yeah. 92%. So the expected move for the upcoming earnings report is going to be $2.05 next week. So so the bulls couldn't hold the 5-day moving average as support, as you guys can see here in white. I would like to see SoFi recapturing the 5 DMA and being able to consolidate above this level. So a potential process of consolidation above the 5 DMA could be attracting buyers. And there's a potential gap here to the upside up to $22.70. It is a good looking short. So the stock got annihilated yesterday, and today it went down as well. But it is in a major uptrend above a rising 20-day moving average, 50-day moving average, 100, 200 DMA. So this is a very good looking short, guys. Say that SoFi pulls back down to the 20 DMA, which is coinciding with the previous support back from early July. Say that SoFi finds support at $20. It could be bouncing back up from this level. It is a good looking short. And I would only be curious about a potential front running into the earnings report. I think that SoFi reports next Monday, right? Is it? On the 29th. What is it, the 29th, guys? Is it Monday or Tuesday? I think it's Tuesday. It's Tuesday.
Tuesday of next week.
There you go. Hey, what's up, buddy? How are you?
Doing well. Thank you. Awesome. How are you today?
There you go. So let me introduce you to my friend Dan, better known as Gorilla with Glasses. What's up, buddy? How are you?
I'm doing well. Appreciate the patience today. How's everything going with you?
I'm doing fantastic. A bit tired. It's been a long day, but here hanging out with the guys. Any thoughts about SoFi? Do you think that we're going to see a front running into the report? We've seen a bit of profit taken here.
I'm actually going to pull up the chart right now. Hold on.
Okay. Awesome. In the meantime, let me take a look at the market structure of SoFi. Let me see.
Yeah, that is a very, very clean support at 20.
Yeah.
It tapped there for half a second.
Correct. By the way, let me turn down your volume a bit. Can you please speak again, bro, please?
Yeah, no problem.
Yeah,
that's good.
Yeah. All right. Okay, yeah, there you go.
Yep.
Yeah, we're good here. Okay, awesome.
Yeah, it recovered the 13-day exponential moving average. Doesn't look like it closed above the 5-day, but if we in the next couple of days don't see it get back above the 5-day EMA, there's probably more downside here.
Okay. Yeah, we have $19.44, and we have a previous. What is this? Let me see. I'm curious. Yeah, we have a previous 52-week high at $18.34. That could be acting as support. So now my question is are we going to see a front running of the report, or maybe more profit taking? So it all comes down to that, I guess, because SoFi reports on Tuesday. So
I think what's interesting about SoFi, I don't think it's in the KRE, but the short interest is 105% there. There's a lot of people trying to get that part of the market to go down.
Okay.
In the event that the short squeezes keep happening, SoFi is going to really run into the quarter.
Okay. Any expectations about the report itself from your
It's
end?
going to be a great report, I think. I think there were a lot of people that were on that platform for a long time that got used to the crypto stuff. And then when they took it away, they didn't close their accounts. And now that they're able to do it again, I imagine they probably benefited from a pretty healthy reallocation of money back onto their server.
Correct. I am taking a look at the last 3 earnings reports, which were very good reports, by the way. But the RIP got sold after those 3 reports came out. So I mean, and on this occasion, SoFi is getting. SoFi is going to be reporting at its highest level ever, I think, before an earnings report. So I don't know. I think that I mean the report has to be like extremely solid, and for the RIP not to end up being sold. So yeah, I mean, and on top of that, guys, keep also in mind again the implied volatility is at 92%, and I know that most of you guys trade the sticker via options, via calls. So if you buy calls of SoFi as of now, guys, you're doing it backwards. You should be selling calls or selling volatility into the report rather than buying calls. The implied volatility is very high, and the expected move is $2.50. So,
That's like 10%.
correct, exactly, pretty much, exactly. There you go.
Albert, I think it's worth. I should ask you.
Uh-huh.
Do you know what I mean by the short squeeze? Did you see Colts today?
Yeah. I was just speaking about that. I was taking a look at the IV rank, and I was telling the guys that I would be surprised if that short squeeze keeps going because the IV rank is as of now at 100%. So it is too high. Options are too expensive. I am curious about Open Door because the IV rank is at 38%. So options, both calls and puts, in the case of Open Door, have been more expensive relative to today. During the last 12 months, only 40% of the time. So I think that that would allow the buyers of out of the money call options, the buyers of out of the money call options to keep trying to force to try to have this gamma squeeze keep going. In the case of calls, yeah, the IV rank is at 100%. The IV percentile is at 100%. I think that this stock is going down, I would say that soon. Lucid has an IV rank of 76%. I don't know if you have any other gamma squeeze candidate that we can go over, maybe.
I don't. I just want to say, though, that was really well put. Correct me if I'm wrong. Or actually, do you know, was Open the IPO that came via SPAC?
Yeah, it came via SPAC, yeah. This was
typically
another
these...
Chamath Palihapitiya IPO from 2021, I think. Yeah.
Yeah, I think worth mentioning about a lot of these SPACs is that early on they are ripe for short squeezes. I think if the data supports a case for more squeezing to happen, it should be there. Typically, when these SPACs come public, the amount of float out there is really minimal, so it doesn't take a lot to move. And of the shares that are out there, many of them are locked up for a 6, 12, 18-month period. Yeah. So it's ripe for a short squeeze, without a doubt.
Correct. I was telling the guys, and this is my opinion, and take it for what it's worth. And of course, I am not calling out a super gamma squeeze in the case of Open Door. If Open Door recapture $3 with the IV rank at 38%, and being the second hottest table in the casino today, and with a positive flow when it comes to call options of 65%, I would be surprised if this gamma squeeze kind of or doesn't keep going. If Open Door, because at the end of the day, guys, technicals is what matters the most. If the bulls do not recapture $3, then I think that maybe this is going to be it for this gamma squeeze. But still, with this IV rank at 38%, I think that maybe we have a second leg of the gamma squeeze coming up, more likely than not, I would say. So, okay, let's see what other stock are you guys asking about. GoPro went up today 40%. How about that? Unbelievable. Wow. Okay. GE Vernova. Let me go see. Yeah. Okay. So GE Vernova. They reported, or they are about to report, right? No, they reported No, they report tomorrow, by the way. Yeah, so we're seeing profit taking into the report, and I guess that they report pre-market. Yeah, before market open. Well, I mean, I hope you don't have any position opened on GE Vernova, taking into account that they are about to report. Let me take a look at the expected move. Let me go to earnings whispers. GV. This is gonna be a roller coaster ride, I guess. Tomorrow, let's go see. GE Vernova. So let me see. So 73% of earnings whispers subscribers expect GE Vernova to report better than expected, and the expected move is 6.3%. Let's go see. So 6.3%, that would be 6.3. That's an expected move of 6.3. Yeah, this is a $19 move to either the upside or the downside. So I mean, there's no technical analysis that I can do here, because this technical short is going to be very different once the report comes out. We're seeing profit taking. I mean, I guess that this stock has gone up a lot since the April low. Let me see. Wow, get this. This stock has gone up 128% since April. So we can make a case that it is priced to perfection. It is a very good looking short, except for the fact that the 5 DMA was broken to the downside. A rising 20-day moving average is trying to act as support. So yeah, I don't really have much to I don't have much to say here on GE Vernova, because yeah, I mean this technical short is going to be changing either the upside or the downside by $19. So that's a lot. Do you happen to know this stock, Dan? GE Vernova?
Yeah, very well acclimated with this one. They're responsible for a lot of the build out for data centers, specifically powering them, if I understand correctly.
All right. So it is a utility stock. I don't know much. I don't know the stock. So it might be a utility if they are dealing with.
No. It's not a utility. They're like building these things.
Oh, so from a tech standpoint, so this stock is very related to the AI network, right?
This gets lumped in with like Constellation Energy and other plays to power data centers. It's not just nuclear. It's a little bit. This is a spinoff from old GE.
Correct.
So yeah. So since then, it's done really well for itself. I mean, obviously they report tomorrow for the open, nothing to do now, but seeing a chart where you have 1 day of profit taking going into a quarter where they also declared their dividends, so it was going to start at a disadvantage as well. I think the market expects this to be pretty good. I'd be shocked to see this
I can
down or up 5%.
If you take a look at the multiples that this thing is trading at, you can make a case that it is super related to the AI network, right? So it's a profitable company, P ratio of 81. It trades at 87 next 12 months earnings, and a price to sales of 4. So I don't know. I mean, if the report is positive, and as Dan is saying, so this is a company that is super, related to this network, this new AI network with, like data centers and stuff like that. Then this, if the stock happens to go down, the dip could end up being bought up, right? But yeah, it is reporting tomorrow, so I cannot do any technical analysis here. This is going to change substantially. They report. Let me see, what time is it? They report at 6:25 a.m. So super early. Yeah, get up early. Yeah. Oh, let's go over Apple. I like that one. Let's go over Apple. I would like to hear your thoughts about Apple. Dan. So Apple, up today. I mean, what? Not even 1%, and closed the trading session at $214.40. Apple reports next week, so keep an eye on that. So still below a downward sloping 200-day moving average. Many people say that nothing good happens below a downward sloping 200 DMA. But buyers have been showing up here, guys. Maybe we could see some sort of front running of the report, because Apple reports, I think that is on Thursday, next Thursday. Let me double check on that. So who knows? Maybe we could see, as I just said, guys, a little bit of front running into the print next week. The expected move is 5%. They report on Thursday, so not this Thursday, but the Thursday after that. at 4:30 p.m. So say that Apple consolidates above the 5 DMA. So a potential process of consolidation above the 5 DMA could open in the door for a test of the 200-day moving average at $222. If you guys were able to take this trade from $213 up to the 200 DMA, this could be a 5% profit trade. So yeah, this could be a potential trade, and we'll see what happens with the earnings report. Any thoughts about what Apple is going to be reporting, Dan, while I take a look at the market structure?
Sure. The story behind Apple right now is that they just don't have a horse in the AI race.
Yep.
Unfortunately, I don't know if anything they say is going to be able to overshadow that. So you basically have a narrative of Apple is really just living on its services business, which, by the way, is one of the best recession-resistant businesses and segments on the planet.
It's a cash cow, yeah.
But if you're going to pay, upper 20 multiple for it, eventually investors got to see some growth. So we'll just see how investors respond when they get the news everyone knows that the Apple iPhone super cycle, so to speak, isn't materializing. They still aren't anywhere on AI. The fat pitch for this one is that they announce during their quarter that they're going to look to use some of that massive cash pile, and instead of just buying back stock, go buy out an actual AI bot in a similar way to what Microsoft is doing with ChatGPT.
Correct.
There's still room for them to go ahead and buy Perplexity, and it would kind of be a drop in the bucket for them, to be quite honest.
How much would be Perplexity? No idea, right? It got to be several $billion, right?
Yeah, but I think Apple, can you check what Apple's cash position is? I'm pretty sure they can afford it.
Yeah, let me take a look at that quickly. Yeah, that's a... This is a cash cow, super cash cow. So they.
Zuckerberg spent, I think, $14 billion to get 49% of Sound or whatever that AI company was. I feel like Apple has the money to splash.
Yeah, they have 48 billion in cash, but they have a long-term debt of $78 billion, which is they are Apple. No issues about that. So
honestly, I think the debt's a wise move. They probably did that when interest rates were still at 1 or 2.
Let me double check on that. I can double check. Let me see if I can get on. Okay, let me see. Just let me see. They paid a dividend, So yeah, $48 billion in cash, and the long-term debt is at $78 billion. Yeah, they have more debt than cash, but if they need to, if they need to put on the table $10-15 billion in order to buy a Perplexity or whatever it is, they'll do it. No issues about that, So.
Yeah, the only thing is that Apple doesn't want to give up control of their ecosystem, and partnering with a group like that would finally be a breach there. That being said, if I think it's interesting, it's sort of a self-fulfilling prophecy. If they report a quarter business as usual and the stock drops another 5-10%, and they have to sit down and be like, "Oh, are we losing our premium multiple because we're not growing anymore?" If they sit down and they come to the conclusion that that is the reason, then they'll be forced to buy Perplexity.
Yeah, correct. And some people were talking about a folding phone or something like that, which supposedly would be super favorable for the Chinese market. I was listening to that. So
Samsung's been doing it, and it's really, really popular with people. This would probably be something cool for the Chinese consumer as well.
Exactly. So maybe that could be a surprise, right? A positive surprise.
But I don't think a phone is going to do it for them.
Yeah, they need to be they need to show something AI related in order to I guess for those in order to try to justify the current multiples. So yeah, the market structure looks. The demand is flat, the supply is flat. Let me take a look at some anchor VWAPs here. Let me see where an anchor VWAP from all-time highs is located at, and yeah, the stock is about to report, guys. So maybe we can see a front run. And if the markets keep going up, maybe Apple could be, leading the way up. And take a look, guys. Yeah, an anchor VWAP that comes from all-time highs is signaling $215. Say that Apple consolidates above $215, so it would be consolidating above all the moving averages except for the 200, and maybe from 215, there's room up to 222. Yeah, the 200-day moving average. We could see a front running. Again, nothing. Some people say that nothing positive happens below a downward sloping 200 DMA, but we'll see about that. Hey, you guys are asking a lot about Apld, Applied Digital. Let's go see Applied Digital here. Down today 1.26%. Closed the trading session at $11 pretty much. So keep an eye on the 5 DMA. It is upward sloping. If held as support, it could be attracting buyers, or this technical short could be attracting buyers, in which case we have a potential gap up to $12.57. So other than that, it's we saw a bit of profit taking yesterday and today as well. And the buyers are holding the 5 DMA as support after hours. So that could be a potential level of support tomorrow. A potential process of consolidation above the 5 DMA again could open the door for $12.50. And I think that this company is some way, somehow related to CoreWeave. I think they signed an agreement, or they reached some sort of, they agreed on some sort of partnership or something like that. Do you happen to know anything about this company, Dan?
I looked into this once. I think they do have some sort of partnership with NVIDIA, but I honestly am not super familiar with this. These are small companies. There's a lot of things going well.
Correct.
It's not really where I'm fishing right now.
All right. An anchor VWAP that comes from all-time high. It's signaling $11. And $11, that implies that if we talk about potential levels of overhead supply above the current price of Apld, we know that we have some buyers trapped at $11.40. Those buyers come from all-time highs. So say that Apld consolidates above $11.40, and if we reconcile that information with this 4-hour chart, take a look. So slightly above the 5 DMA, we have the anchor VWAP that comes from all-time highs. So a potential positive scenario would be Apld consolidating above $11.50-ish. That could be attracting buyers into this technical short. And do I have the market structure of Apld?
While you're going there in the main, I put a little chart of Apld. In my opinion, it actually looks technically really healthy. You have the MACD that's triggered a bullish crossover. You really like to see that from an intermediate momentum perspective. RSI is back at 56, 55, but it looks like it wants to kind of creep back up. If I were to play this, I would look at that blue line that I've made by just connecting the two prior highs. And if the stock can live above there for a session or two, I'd pull the trigger.
All right. Perfect. Last but not least, before I wrap it up, guys, let's go see Google, because you guys are asking about Google, and they report tomorrow after hours. So let me tell you guys, the expected move, if I remember correctly, let's go see. And this is a stock that both of us might be talking about in our podcast on Thursday. Remember, guys, that I am doing a podcast every single Thursday with Dan, with my friend Gorilla with glasses. So
charts with checks.
Charts with checks, exactly.
Charts and checks.
Charts and checks, correct. So this upcoming Thursday, we are going to be doing our 3rd episode. So go check that out. I will be sharing with you guys on both servers the video. So 72% of earnings whisper subs believe that Google is going to report better than expected, and 57% believe that the stock is going higher once the report comes out. The expected move is 5.8%, 6%. We can round it up. So a 6% move, guys, to either the upside or the downside would be, this is going to be a $9 move to either the upside or the downside. So this is a very good looking chart, guys. Above all the moving averages, we can see over here a rising 5 DMA. So there's no need to do a very detailed analysis on Alphabet, because this stock is going to be going either up or down approximately $9 tomorrow after hours. So don't trade it. You don't need to be gambling on earnings. And do you think that if Alphabet, I don't know, if they don't like the report, do you think that this dip ends up being bought up? Or do you have concerns about the report that is coming out tomorrow?
My only concern is that you actually see a sequential decrease in search revenue.
Yeah, which might be the case.
If it's flat or slightly higher, I think a lot of the tension comes out of the print.
So that would be the most important metric that you will be evaluating?
The most important metric for the market is...
Cloud revenue is expected to reflect a year-over-year growth of 26%. So that could be
the cloud growth needs to keep going.
correct. Correct.
However, I think it is worth mentioning that given what Tesla's doing and what Uber is doing, there is a appreciation for what Waymo is doing. In San Francisco, they now have a 23% market share, overtaking Lyft, second only to Uber. In the AI world, the Gemini Veo 3 was a massive hit. The things that they got penalized for going into April, and really since that one quarter where they went into it at a new all-time high at 210, they're actually getting rewarded for. In my opinion, the setup is really, really good right now. I'm a little bit skeptical that the search monopoly money machine will stay alive long enough to fund YouTube, Waymo, and all these other long-tail projects debt-free. But the market's telling me that that is not the right position to take. So I think that if we did get a 3, 4, 5% decline, which is what the weekly options are showing, about a 3% move from now to the end of the week, then I feel like it would be bought up.
Okay. Okay. I mean, from a sequential standpoint, Google search revenue came out on the last earnings report for Q1 of 2025 at 50.7 billion. So that figure should ideally go up. Sequential growth is important here. And a year ago, Google search revenue came out at 48.5 billion. I don't know what the figure is, what figure are analysts expecting, but I would say that anything on Google search above 51 billion could be a positive number for Google. And of course, guys, tomorrow the markets are going to be super sensitive to capital expenditures, which obviously this is a metric that has been going up exponentially because Google is investing in a very aggressive fashion in order to be a strong competitor in the new AI industry. And I think that free cash flow went down quarter over quarter on Q1. So ideally, we want to see free cash flow going up and capital expenditures, especially guidance on capital expenditures being like reasonable or, under control. So that is going to be important. But yeah, I agree with you 100%, bro. Tomorrow, all eyes will be on Google search, Google search revenue. Yeah, for sure.
You said that really well. I think that CapEx is important if it's in a reasonable band, but based on what we've seen from TSM, it's not going to come in low. Yeah. We know that the Googles, Metas, and Mag 7s of the world are sending NVIDIA checks that are being sent to TSM.
but get these guys. On Q4 of 2024, CapEx came out at 14.2 billion. and
Casual.
And Q1, 17.2 billion. Jesus Christ. Wow. I mean, and then you find people that aren't bullish about on NVIDIA, guys. Unbelievable. These companies are investing, money like crazy on AI, and in general terms, data centers and chips and whatever it is. So
I'm a big fan of the quote, "The market isn't stupid." The fact that Google has had a clean breakout above the 150 and just took out overhead resistance of 180 is an indication that Google is not going to miss on search or cloud. And if it does, then we'll get some sort of pullback, but there's no angst in the options market.
The chart looks very good. Very, very, very good. No doubt about it. The chart looks super, super, super good. Okay, let's do one more. Webull. Let's go see Webull.
Oh my goodness.
I mean, yeah, this is it's a disaster stock. The stock went up today a lot, actually. The bulls of Webull recaptured the 5 DMA. I don't know if some people are speculating, like Webull could be another Robinhood, which I'm sure, at least in the short term, that isn't going to be the case. But I don't know. I mean, buyers have shown up, guys. So Webull is up from early June until today. It is up 74%. Wow. I mean, that's a lot. That's a big rise. I don't know. Keep an eye on the 5 DMA. It's it is rising. It is coinciding with the previous level of resistance back from early July. So say that bull pulls back down to this 5 DMA and consolidates slightly above that level. This situation could be attracting buyers. Yeah, I mean, the short is starting to look interesting. Let's just put it that way. After Webull collapsed.
Be careful.
Be careful. Correct.
Be careful.
And this is not a Robinhood, huh? Because I think...
No. What this is, though, is a Wall Street Bets name.
Exactly. So, yeah, be careful. But yeah, as long as Bull remains above $15, maybe it can keep going higher. So let me see.
Yeah, the Wall Street Bets ETF is going off right now.
Oh, really? Are they?
That's a joke. I don't know if that
exists. Okay. It might eventually.
It seems to me that every stock that's been mentioned on Wall Street Bets the last week has just either been short squeezed or bid higher. It's something you can definitely trade, but you have to go into it understanding that it is a group of traders that is extremely nimble and is not really thinking this through. So you could wake up and it could be up 30 or wake up and it's down 50. It's a very, very difficult group of stocks to trade.
100%. And by the way, guys, speaking of retail investors, yesterday there was a rumor, that was going all over the place, that the PDT rule, which doesn't allow you guys to take more than 3-day trades during five trading sessions in a row. So there were rumors yesterday that rule was going to be limited down to $2,500. This has turned into a casino, guys. Who cares anymore? This is a casino.
Yep.
Would you be in favor of that rule? It will be limited down
Explain
to
me the rule
$2,500.
one more time.
So remember that as of now, if the total value of your portfolio isn't above $25,000, you're limited to 3-day trades during 5 trading sessions in a row. So if you take more than 3-day trades during 5 trading sessions, you're correct. So your broker's account gets blocked, and you cannot take any more trades, right? If you're using margin, that is. So now they want to reduce that amount from $25,000 down to $2,500. So
I'm okay with it.
Some people can, gamble more. Who cares? It's a casino.
Listen. I personally disagree, but this is the United States of America. You can do what you want with your money.
With your money,
we allow you to make stupid sports bets on wagers that don't matter.
Yeah, but I think I agree with that. I agree. So I am agreeing with you on that. But I think that JM is right on the description on the live chat. They want more. They want more of retail's money. I think that's
absolutely.
Yeah, that's what it is. It's a business.
I think that is true. I personally am against it, and I personally would never it's just not my game.
Yeah.
But it's a matter of, in the United States, we don't discriminate based on how much money you have when it comes to these things.
Yeah, I would reduce it. So I am in favor of reducing the limit or the amount, or the total value of your portfolio. But I mean, from 25,000 down to 2,500, that's a lot. I would drop it down to 15,000 or 10,000, but I don't know. It is what it is.
And 10,000 seems like a milestone. I would agree.
There you go, guys. Palantir. They're asking about Palantir.
But while you're pulling that up, I do want to say this too. It kind of all runs into the same thing of 24-hour trading and weekend trading. I know that's what we're going to end up at, but I'm not a fan of that either. I don't like the idea of people waking up at 3 a.m. and panic selling their portfolio. I feel like humans are not meant to be hooked into things 24/7, and people need a break.
I mean, take a look. I also agree with JM. If this PDT rule passes, I will belong on Robinhood. Their profits will be insane. Oh yeah, even more insane. 100%.
Not long already. Come on now.
Yeah, Robinhood would be the main beneficiary of that new rule, of course. Palantir.
Without a doubt.
Yeah, Palantir is going down, guys. A little bit of profit taking down today, 1.79%. Closed the trading session at $149.07. It is a good-looking short, despite the fact that the 5 DMA was broken to the downside. I would be expecting support at the upward sloping or rising 20-day moving average at $142. So ideally, guys, we want to see buyers recapturing the 5 DMA at 151 and maybe pushing price up to all-time highs, 155. This is a company that in regular market conditions, guys, unless we see a big drop in the NDX, Nasdaq 100, S&P 500. So unless something unexpected happens, these kind of tiny pullbacks end up being bought up. So I might be a buyer at the 20 DMA 142, or even better, down to the rising 50-day moving average at $134. And when is
That's where I would be looking.
correct? When is Palantir reporting? Let me take a look at that. So Palantir reporting. They report on
August 4th. I think that's a Tuesday.
Wow, you know it. You're super aware of this information. Yes, sir. August 4th.
It is a Monday. Sorry.
All right. Okay. So, if Palantir drops down further, guys, I'm thinking that the likelihood for this stock to find support that maybe, I don't know, the 50 DMA 134 is high, again, in regular market conditions. If a 10% correction in the markets as a whole kicks off, then that might be a whole different story. But in regular market conditions, I think the dip gets bought up, and that the likelihood for us to see some sort of front running into the earnings report on August 4th is high. Let me take a look at the market structure.
You're right about that. But if Google reports an absolute stinker and it's down tomorrow, Palantir's gonna be down tomorrow too.
Oh, would you be relating Google's report with Palantir? That's interesting.
AI stuff. Yeah,
Okay.
it's all going to trade in a basket. These things are correlated now.
So if Google drops the ball, we are seeing Nvidia, Palantir, and so forth going down, right?
Maybe not Nvidia, because Nvidia is if Google goes down because the market's like you're spending too much money on chips, that's a good thing for Nvidia.
Correct.
If it's a matter of we can't make money with AI, and Palantir's the only company, the market would be wrong to do it. But I imagine you'd see some, I call it bad pins action.
I mean, it could be an excuse, for
Totally.
For,
I think people are looking for an excuse.
in order to take profits across the board, maybe on tech stocks.
I might write puts at $125.
Oh, that would be even better. There you go. If we take a look if we take a look at the market structure, guys, it looks very good. Look, the demand is rising through the roof. The supply is also rising, but the level of the supply sellers is way lower relative to the level of the demand. So, I mean, with this market structure, guys, I think that, again, in regular market conditions, they are buying the dip. 134 could be a potential spot in order to, buy the dip. But they will wipe out their accounts faster and fall fast, which might cause them to learn faster with the 2500 PDT rule. Yeah, I mean, it's up for debate, guys. So we'll see what happens with what ends up happening with that PDT rule, but I don't know, man. 2,500, I think
it's really difficult, man. Because you don't want this to turn into a full-on casino.
But it has turned into that, bro. I mean, for the most part. So yeah, it's like intensifying the casino. So
exactly. Like, do we really want to give in to that take?
Exactly. That's what I was saying. So, okay, guys, we are going to wrap it up. Remember that I recently, a month and a half ago, finally started a Patreon in English. You guys told me to start a Patreon in English, during 2 years. I ended up doing it. So you guys can be more in touch with me. In the description box of the video, you have the link if you want to join us. My friend Gorilla is also with me in our Discord in English, and we are going to be doing the 3rd episode of our podcast on Thursday. So yeah, stay tuned, guys. Be careful out there.
Absolutely.
And stop gambling, okay?
Yeah, if you're gonna gamble, bet on the NBA.
There you go.
There's a time and a place for that, man.
There you go. And who knows? We'll see what happens with the 2,500 PDT rule. So thank you, guys. Enjoy the rest of the day. Take care. Bye-bye.
Take care, everybody.